Good morning, traders and investors. Ben at Tyndall, tradinganalysis.com. Thank you all so much for tuning in. Happy Wednesday, October 20th to you all. So a lot's happened in the market since we met last week. We had CPI and PPI data coming in at or slightly below the forecast, which is certainly a change to what we've seen previously this year. And in addition to that, we also had a little bit of clarity. We had some light shed on the tapering topic with last month's Fed minutes. So as it stands now, it does appear as if we're teed up for what could be a fairly bullish finish to Q4 here to round out 2021. So we're going to get to the charts in just a second. Before we do that, let's bring in the trading analysis team. Good morning, Terry. Good morning, Alex. How are you guys today?
Morning, Bennett. Good morning, Alex. Good morning, traders.
Hey guys, good morning.
What's happening? What's new? How are you guys today? You guys keeping busy?
And I'm all refreshed. I just got back from a week-long vacation with my wife in sunny Las Vegas.
Yeah, I was going to say you've been gone, and we didn't have our show last week. Alex had some other arrangements. Terry was on vacation enjoying Las Vegas. So yeah, how did it go, man? Was it busy? A lot of people out there?
Yeah, I enjoyed Vegas.
He came home with more money than he left with, right?
I did. I won. I did very well. Especially Caesar's Palace was good to me. So.
Good. I'm
but
glad
we also
you
saw a lot of good shows while we were out there. That was the biggest thing. I think we spent more time in shows than we did gambling. But the Beatles, Cirque du Soleil. I'm still singing Beatles songs in my head since then. So.
Oh, that's awesome.
Yeah, a lot of fun.
That's awesome. Yeah, it's a fun city. You just can't spend too long there, though. So what's up in your neck of the woods, Alex? How are you doing?
I'm just watching Terry and dreaming go to Vegas for a couple of days. So first thing on my list in Vegas is to rent this new Huracan Evo from Lamborghini. There is a rent for 2 days, so that I will not go to Caesars first. First I will rent this car for a couple of days, and then I will go with the rest of the money to gamble. So I have definitely wants to go to Vegas. On my end of the woods, yeah, Bitcoin almost new time high. New ETF rolls out, Bitcoin futures. So adoption is going now, and it's going to probably expand because as you know, you don't have to own Bitcoin anymore. You can trade ETF, just mirror the price. So it will be on all trading platforms around the world. So definitely we are coming to a more exposure, and we stay bullish, and we're going to see the charts today.
Love it. Yeah, who would have thought? Digital currencies, trading in ETFs, and cannabis stocks. It's a whole new world out there. So, all right, let's hit it. Let's take you through the charts. We're going to take you into the Motive Wave platform. Yeah, go ahead.
There was definitely a lot of cannabis on the streets.
Isn't it legal in Nevada now? Isn't it recreational there?
I think, yeah, there were stores.
Oh my goodness! Well, it's got to be then. So. Yeah, I'm sure they're capitalizing on that one. So, all right, let's hit it. I'll be back on the other side. Going to take you guys through the Motive Wave platform. Take a look at the S&P. We'll take a look at the Nasdaq. We'll also take a look at a wave count in 10-year yields. And gentlemen, we'll be back on the other side. So good morning once again, and thank you guys. We appreciate you tuning in. All right, so let's jump into it. As mentioned last week, we did have a little clarity regarding tapering from the Fed, from last month's Fed minutes. As it stands now, should they decide to move forward with tapering at the next meeting, they're looking at a mid-November, mid-December start date. Currently looking to target a $15 billion taper off the $120 billion that they have been purchasing monthly. And interestingly enough, that came on a week where CPI and PPI data wasn't quite as hot as things have been. So the market has responded accordingly. We've seen a very solid recovery effort here in the S&P as well as the Nasdaq. The S&P has actually retraced significantly more of the decline. Looks like we're having some audio issues. I'm not sure if that's on the YouTube end. Let's see if we can verify. Okay, looks like it could just be on your end. I just got a text message from one of our clients watching. Try refreshing your browser. If that doesn't work, you can check out another browser. Okay, so the last time we met, we were looking at the corrective pullback here in the indexes, and the question that we were looking to answer was whether or not the move lower from the September 24th, 25th area retracement was complete. Was this in fact simply a three-wave corrective pullback? Standard garden variety 5% in the S&P, about 8% in the Nasdaq. And is this now setting us up for upside resumption? I do believe that to be the case. When we met last, we had noted on the pre-market pullback the possibility that we were gearing up for further downside in wave C. The alternate explanation for the pre-market volatility that we saw in that session was simply traders taking advantage of the range expansion that's unfolded as the markets have been in the period of correction that you see here. So in the S&P 500, you'll notice we do have a corrective pullback that can be counted as complete, three-wave move into October 4th. And the rally that's unfolded since the October 4th low has been a little bit tricky. And the reason it's been a little bit tricky is because the initial breakout unfolded as a three-wave move. Three-wave moves are not motive waves. Three-wave moves are corrective structures. And with that in mind, we couldn't yet confirm or sound the all clear for upside market resumption. So what I want to do today is take a look at where we view the markets now, where we view this corrective pullback in terms of the higher degree trend off of the COVID lows, and then talk about where the uptrend will confirm itself. So let's first start off by taking a step back and taking you to the daily chart of the S&P. I've been operating under a wave count that essentially puts price action from the March 2020 low in through the recent September high as still contained in the same degree of trend. And essentially what that means for those of you who are new to Elliott is a larger wave 2 correction was possible that would exceed anything that we've seen since the COVID lows. In the S&P, I believe that would be right at around 10%. Yeah, 10.5% is the largest corrective pullback that the S&P has seen from its March 2020 support. The three-wave pullback that we just completed does not qualify to be of the higher degree trend. It's only 5.8% in the S&P. It was around 8.3% in the Nasdaq. And with that in mind, if markets are resuming on the upside from here, we have to answer first where this fits in, which we did so in a video last night for those of you who did not catch it on the YouTube channel. And this falls right in line with what's been our alternate view of markets. The alternate view of markets assigns that 10% correction in September of 20 to be the wave 2 of the higher degree, thus putting us in a third wave upside breakout. So let's get off of the daily, and now that we've identified where we view this correction, let's talk about where this correction truly confirms upside resumption. So off of the daily, let's take you down to the 195 minute. We'll go straight to the 1 hour chart. Interestingly enough, while the correction itself did not exhibit some of the guidelines that are typical of three-wave moves, that is the guideline of equality, the guideline that suggests the angle of descent or ascent in the C wave is a less significant angle than the A wave. But the higher degree wave 4 that we view this three-wave correction to fit in did exhibit equality to its wave 2 counterpart. So we have two corrections of the same degree demonstrating equality. And let's now get off the 1 hour, take you down to the 15-minute chart and talk about the move from the lows. So the wave count that you see here in front of you, you might be looking at this and thinking, my goodness, there's clear overlap in this wave 4 and wave 2 position. That's not valid in a mode of impulsive structure. Of course not. This is a mode of diagonal structure, expanding variety, progressively larger segments of the wave structure. Now, this falls a little bit out of the guideline of the right look. and I think you can all agree that this fifth wave does appear to be a bit extended compared to waves 1 and 3. It's not wrong, but it's not the preferred interpretation at this point. Regardless, this alternate and the preferred wave count that I'm going to put in front of you in just a second here, they both imply the same thing. That is, once we meet resistance, either from here or just above the all-time high, that should give us a smaller three-wave pullback that would then confirm upside market resumption and allow traders to get back on board. Now, let's talk about what we now view to be the preferred count. And you might also be looking at this and thinking, gosh, why can't this be 1, 2, 1, 2? We've talked about this before. That would be a massive degree violation. So in the S&P 500, we feel price action has technically confirmed upside market resumption in the form of a very well-disguised wave 2 flat. So zooming back in on price action here on the 15-minute chart, from the October 4th low, we have a clear 5-wave rally up. We have a very sharp move down, and then we have a rally back that can be counted as a 7-swing structure. And the next subdivision that really kind of seals the deal here for this flat, in my opinion at least, is the fact that price action from October 7th through October 13th was a 5-wave mode of impulsive decline. That then completes a wave 2 flat, and we're now moving higher in wave 3. So similar to the expanding leading diagonal wave count that I put in front of you, this too would also call for a corrective pullback to confirm the upside resumption. That's where I'm going to be looking to position with our clients for a move back to the high. So that's the S&P 500. We continue to view all 3-wave pullbacks as buying opportunities. This one has certainly been a little bit more challenging given the significance of the Nasdaq's resistance that we had up near 15.5 to 15.7. So that's the S&P 500. Let's take a look at the Nasdaq. Taking a look at the Nasdaq, we have a very similar development at work in that the pullback from September in through the October 4th low did unfold as a 535 Elliott Wave zigzag structure. In this case, we actually have the guideline of equality met, where wave C does meet equality to A. Now, from the October 4th lows here in the Nasdaq, we have a very similar structure where you see what appears to be a 3-wave rally to the upside, what can be counted as 5 waves down, and then a very sizable breakout from last Wednesday, October 13th, when we had the clarity regarding tapering in the Fed minutes. So from there in the Nasdaq, we're viewing the exact same structure. 5 up in wave 1, a very well-disguised sideways flat in wave 2. The flat here in the Nasdaq 100 is a little bit more clear. Here in the Nasdaq, you'll notice that from the October 5th high, we pull back into the October 6th low, and then we rally in an unmistakable 7-swing structure. 1, 2, 3, 4, 5, 6, 7. That's A, B, extended C. The only reason why it wasn't quite as clear at the time is given the significant 200% external retracement. So this is more of a in hindsight structure, but it still serves its purpose to help to confirm upside resumption in the indexes. So we're looking for the same thing here. Wave 3 resistance met, wave 4 corrective pullback, and then continuation in wave 5. Now, if earnings are an all-out disaster, which I don't expect that to be the case, we're in a decade of under-promise, over-deliver. Unless earnings are just a complete disappointment, guidance is absolutely horrible. We continue to view this market as still well contained in a higher degree uptrend. Okay? All right, that's it. We're going to go ahead and leave it there on the indexes. Let's go ahead and jump back over to the trading analysis team. What do you guys think?
Yeah.
Crypto.
Yeah, it was very tricky trying to analyze that because, you know, at the first glance, it looks like those 3 waves up, and we know for a fact that that's not a confirmation move. So I give you kudos, Bennett, for having a keen eye to dig in and find that hidden flat buried in there, because once you showed it to me and my eyes suddenly opened and I like, Aha, that's the, oh yes, there it is. Because I tell you, I was struggling too, but
Yeah, it's been a choppy one off of the lows. And to answer a question, or more of a statement that somebody said, essentially what they said is a B wave in an expanded flat being longer than the impulse in wave one. He says, I don't think so. I agree, that's a little bit unusual, but you also have to consider the fact that we were coming out of a sizable market correction. If you take a look at the analyst's opinion, we had a lot of mixed sentiment there. There's a lot of back and forth, a lot of push and pull. The idea that wave B is a larger magnitude than the technically parent wave one, is not an invalidation. It certainly doesn't meet the guidelines, but I think the 3-wave rally to the upside and the 5-wave decline makes it, kind of confirms that wave two. Here's the alternate. Okay, let's just say for argument's sake that that's 3 waves up. Okay, well then let me ask you this question. How can you have a 7-swing 3-wave move in a C wave when your B wave does not retrace beyond 618 and your A wave is an impulse? This would be a zigzag, and it would be technically invalid unless we were to not follow the rules and guidelines. It's a tricky count, I agree. I think this is the best case scenario. Regardless of if we're looking at the expanding leading diagonal or if this is in fact a disguised flat, they both have similar implications. That is, the next corrective 3-wave pullback will begin to confirm the trend and set up continuation to the upside. So complex, I don't know, we'll see. It's a tricky one.
Turning points can always be very difficult to pin, and that's why we don't trade exactly off the bottom, guys. We look for a confirmation signal that gives us enough conviction to jump back in. So just guys, just hang on, be patient, and continue building your watch lists. Get ready, because it's coming. It looks like it's coming. We just need to hang on a little bit more, get our confidence. Those guys that, you want to be more conservative trading, let the market tell you when it's ready to go. Don't just guess at it.
Yep, most definitely, most definitely. All right, we're gonna go ahead and leave it at that. Yeah, crypto, WXY, I mean, I say we're continuing to just kind of await more clarity on the earnings front. I think a corrective pullback along with better than expected earnings, increased guidance will give the market what it needs for the traditional seasonal rally into year's end. So, all right, what do you guys, Mr. Terry Long, you ready to jump in here, bring us up to speed on the world of sector focus? All right, let's hit it. Here we go.
All right. Hello, traders. I'm Terry Long at TradingAnalysis.com with your weekly sector focus. So I see the markets continue to rally from the September correction for a second week in a row while I was off gallivanting in Las Vegas. I wasn't very active here with the membership, but Bennett, I'll tell you, I was up early in the mornings, and because it was 2-hour time zone difference. I was up early in the mornings checking on things.
I saw you in our.
So I went.
I saw you in our work chat, and I'm like, Terry, go back to Vegas, man.
Well,
can't get away. He loves the markets. I hear you.
Wife's still in bed. Yeah,
that's true. That's true.
We get out later in the day, in the evening, so it worked out good. But yeah, I mean, it's crazy on the West Coast. The markets close at 1 o'clock, right? So.
Yep, it's a whole different ballgame.
Get all your work done in the morning and then go play the rest of the day. So, yeah, we've really seen 2 solid up weeks coming off of the September lows, right? So, this red box here is the decline that we went through, and then we started the rally from there. I mean, just look at the performance that we've seen here. The S&P rose 1.82% last week, pushing decisively through the this shorter term downtrend channel. You see that little green dashed line there? That's through all the highs of the downtrend. And then now once you've broken that to the upside, that's one of my non-Elliott Wave confirmation signals. Another one is, later on, you're going to get the 20 and the 50-day crossing each other. And you can see price action's already recaptured above the 50-day simple moving average. And look here at the slope of the 20-day has also turned positive. Now, technology stocks moved sharply higher last week, rising 2.2%. Also recapturing their price action back here above the 20 and the 50-day simple moving average. Now, Monday morning pre-market futures signaled a further continuation to the upside. Now, we saw the NDX rise over 1% on Monday, followed by a 0.72% gain. So we're up 1.74% just in the first 2 days of this week. The S&P also rallied higher on Monday, but only with a third of the size of the tech sector. S&P gained 0.34% on Monday and added another 0.74, equaling the Nasdaq on Tuesday. This week's sector performance, let's move this out of the way. This was last week's sector performance, where you can see the value plays were still in the lead. This week's sector performance is kind of reversed. Now we have technology and communication sectors jumping out in the forefront. A little table hidden back behind here shows us where we're at. So technology is already up almost 2%. Technology communication 1.74. Healthcare coming in third here at 1%. The laggards this week are staples, materials, and utilities, rounding out the bottom here. So the financial sector too, energy and financials still doing quite well. Consumer discretionary stocks are also on the move higher. Let's go ahead and switch over here, take a look at our sector rotation. At the close of last week's trading, we saw the XLK move down into the weakening quadrant, leaving the leading quadrant void of any sector. So this is very unusual, because all of these 11 sectors have to balance right here at the origin, where is the benchmark S&P, right? So a completely void quadrant sets this whole thing out of balance. But look here, I think this void will be short-lived, as we now see the financial sector staging to move from the improving quadrant over into the leading quadrant. Additionally, the consumer discretionary sector is also seen here with an improving trend and a northeasterly heading, and it's also rapidly approaching the border. If I animate and tick forward just to grab in Monday and Tuesday's action, you can see the dynamic of the vectors. Energy continues to push higher. But here's financials. Now, Monday and Tuesday, we only partly through the week, so these vectors aren't complete yet, but we're certainly edging even further close to coming in. So I think you're going to see very soon, we're going to have the financials, consumer discretionary, and very likely the energy sector over here in the leading quadrant. Now, the energy sector's high momentum move does appear to be slowing down a little bit, but if you can clearly see the relative strength gains as this vector has started to turn eastward. So just look for that. All right. So just because technology has moved down into the weakening quadrant, I would not count it out yet. So indeed, yesterday's 1% gain demonstrates why I say the relative strength component is more important here than the momentum. Now, while we've seen a big corrective move in the tech sector in the last month, this high relative strength ratio keeps this sector number one in our list. This is why I rank these sectors by the relative strength ratio. Now, both real estate and healthcare, they do continue to lose relative strength ratio. They're further here to the left than technology. They are approaching the lagging quadrant much sooner than the tech sector, Possibly there's a little bit of a bend here forming in the real estate, but this is not a confirmation hook just yet. Healthcare turning slightly, but it's still, these guys are going to be pushing more than likely back into the lagging quadrant here soon. Now, the communication sector has a much shorter tail, but it has already bridged the boundary and is seen now in this lagging quadrant. And we need to see some positive price action here in the XLC before we want to confirm anything, any new opportunities there. But however, there's always a however. The close proximity of the XLC here to the origin, this is the benchmark, right? The S&P is right here. So the closer any of these vectors are right here, the more these sectors are going to behave similar to whatever the S&P does. So the XLC by itself may be directionless, but it'll just follow the rest of the market, if that makes sense to you guys. The industrials and materials sectors are seen over here with vertical rising momentum, but they're not seen gaining any relative strength with this move. So that is a bit concerning. And the staples and utility sectors, they also remain in an underperforming state. So while the markets were staging a modest correction in September, I continued to guide our clients to be looking for stocks that were bucking the downtrend and holding up or even moving higher during this broader market decline. Now, I gathered about 24 stocks here that I identified as outperforming or demonstrating strength in the face of broader market weakness. Now, here is that list in the weekly RRG, and it is sorted by relative strength ratio. But can you see any common pattern going on here? So what we've got here, all of these stocks that are exhibiting this very rapid northeasterly push. Let me just animate this backwards for you. Let's take you back into the last week of September. This hooking pattern is what gives us the clue that these stocks are ready to push higher. So before the overall market corrected, we started to get the initial hook formation there. And then we've got this major turn. Now, these stocks are rallying and they're ready to push higher while the broader market was still fading. And then we see now many of these stocks have already pushed up here into the leading quadrant. I'll scroll through a few of the charts here for you guys. Let's close that, get that out of the way. Got here already, this is Northrop Grumman. Set the low on September 20th. Got a confirmation breakout for me. My first signal of the breakout here was a penetration above the downtrend channel. And then you can see how much that is accelerated. We've already 15% off of the September lows here in Northrop Grumman. Some other stocks I like. Yes, there are semiconductors that are out there making new all-time highs. This is Xilinx. And it just, it also bottomed. Where did it bottom here? Bottomed right there, October 4th. Cleared a new all-time high right here on October 13th. So that's just a week ago. And now is definitely clear and pushing higher. So United Rentals, maybe not so much. Very close to a new all-time high. This column I have over here calculates the percent from the 52-week high, and some of the 52-week highs are obviously all-time highs. So United Rentals is within 4%. Tesla is within 4% of its all-time high, and that's probably due to the retraction it had yesterday. Raytheon. Oh, this is on a weekly chart, not daily candle. Sorry. This calculation will be, I think, from a weekly candle. There's Pioneer. Here is ON Semiconductor. This one I think is kind of weak here. It does look like it's correcting. The price is still yet to catch that 50 and 20 day, but it looks like it's working. several of the energy plays. There's Northrop Grumman again. Netflix came out with earnings and excellent guidance last night. I haven't checked on it this morning. It looks like it's trading at 624.50 here if my data is, I think this data is active and live in pre-market right now. Marvell Technologies pushing to a new all-time high channel. So there's a list, guys. These stocks that have exhibited this strength in the face of the broader market weakness, they may be extended here near term, but when we get that little pullback that Bennett is showing us and the broader market is ready to rally, these stocks, I believe, are going to be some of your best candidates to be the first out of the gate. So please, that's it. Unless you have something else you want me to look at, Bennett, that's all I've got for you guys today.
Much appreciated, Terry. Thank you so much. Yeah, I want to keep my eye on a couple of those semi names. There's several beaten down currently. All right, Mr. Alex, sir, I'm going to pass you presenter mode. Get you set up. Futures are mostly sideways this morning. All right, you ready to rock?
Yep.
All right, let's hit it. We'll be back.
Hey, Bennett, one question.
Yeah.
Yeah, do you know how I can remove this from the screen? Because I'm operating, my other screen is currently offline. So is anybody knows how I can...
Nobody can see that, Alex.
Oh, nobody can see that. Okay, great.
Yeah, you can click
the
arrow. Nobody can see it.
Great. Okay, so let's revisit a little bit of macro, and let's look as usual at 10-year yield. So as we have been missing the last week, but the yields are currently testing this pretty kind of let's say a visible resistance levels around 1.6. But I think as this develops, this looks pretty much relatively impulsive on the upside. So I think this was a 1, 2, 3, 4. I think we're gonna test in some couple of weeks this 2% pretty sizable resistance from where I will expect some corrective pullback. We have to consider now that possibly we need to take into account to count this a little bit more impulsive on the upside. I think, Bennett, you didn't showed your wave count on the yields. I didn't look at it on our repository, but I'm thinking, looking at the wave structure, it looks a little bit more bullish than before, and potentially you can maybe go on that after I finish. But I guess I will start to look this a little bit more impulsively on the upside, because simply because of the fact that this now looks like a five-way move development on the upside. And I think next target is around 0.7, which is already there. And I guess, as usually markets does, test it a little bit, maybe a small pullback, and then it attacks a bigger resistance levels, which I think is going to be around 2. On the European side, looking the German bonds, we are looking also on something which looks like maybe a small penetration of this possible triangle here, but I'm still going to exercise, as I said in a couple of sessions before, that if this triangle doesn't hold, I'm going to look for a complex WXY. I still think we are not done with this wave 4. This might just go a little bit more directional and in a sense of a complex corrective pullback, and then in one moment, maybe in a year or a little bit earlier, we might see again deflationary kicks out. So it all depends, guys, regarding this supply side, because economy is still not balanced. Oil is still moving on the upside, and as you know, some of the other compounds or products or asset classes which are related to dollar are also going up in regards of commodities. So I guess this inflation will be most likely prolonged a little bit more than it was expected. I still don't see anything impulsive here to actually move this wave 5 here. So until I see a break of this support zone and something more impulsive in the wave count, I will hold the view that we are in some type of a consolidation, which might take some time, and then we might continue on the upside in a year and a half in deflationary manner. So from there, let's jump to dollar index. So dollar index is testing this lower support. I still think we are in some type of a move C on the upside. I still look upside on the dollar. This is a pretty solid support, which I think we might trace out a small triangle here, or some kind of a corrective consolidation before we start to move upside around 96. Definitely, I would not like these support levels to be broken, especially this one here, and then that will have a completely different implications. But for now, I don't see anything suspicious on the downside, just a small three-way pullback with a solid hold of the support level.
Alex, where's the euro at trading at today?
Yeah, euro is also trading around 1.16. So I'm looking also for the ABC pullback in euro, which I think is going to be around 114, 113. So there is also a small
we're not calling a bottom in the euro just yet. We still got more downside, so that means more upside. That's what you're saying. More upside for the dollar index. This is just a intermediate correction. Okay.
Yeah, but on many other assets, currencies or currencies which are related to dollar, in a sense of either some commodities or generally, when you have a G7 currencies, you have a different correlation through DXY, because they're in a different percentage in the DXY, and the biggest representative in the DXI is euro with a 57%. So then you have a couple of other currencies which are in a lesser percentage in this DXY. That's why there is some very kind of a correlation between the price in euro dollar and dollar index, because they mirror itself in 60% of the time. So I think euro is still not finished. I think we're gonna see 114, 113 before we see something more on the upside. So from that perspective, we can revisit gold wave count, which we have been looking for some time now, still pretty much sideways, with some of the implications we might trade a little bit more higher. I'm still looking a couple of options. One of the firmest option I have, because we are holding this very important line at 1,670 pretty nicely. So one of them is a triangle. There is a couple of more options, but I will go with them when I see a break of some of these very key levels. For now, we are very contained in this sideways move, which I think have a couple of more legs to unfold. Definitely, if we see a D wave, and this B wave can turn into some type of a triangle, or this can be some type of a flat, we revisit these levels here around 1,880. We go down in 3 waves, and that will be a solid confirmation, actually, that we are in a triangle. And from there, a smaller 5-wave move will confirm that we are in the higher degree wave 3 on the upside, around 200, 2,200, 2,300. So that will be some of the targets. There is a couple of more higher, but I don't like to sound very kind of a hype-ish. I like more to be more conservative with this type of target. So this will be my first target if we actually hold these levels. As I said, there is a couple of more options. As you can see, the correlation between the dollar yen and gold are pretty steady. We had a little bit of disconnect here, but in general, this connection is pretty steady for the number of years. And dollar yen is, this is an inverted chart of the dollar yen, is moving on the upside. Gold is staying pretty steady on the sideways, and well, always you see dollar yen moving on the upside, and gold keeps a steady. Either we're going to break soon down in gold following this correlation, or the dollar yen will turn on the other side very soon. So this correlation has been very solid over the next 10 years in regards of
I'm
the
betting in the
price.
near term we're going to continue to see weakness in gold down to that support level you've got there for sure. That we tested that 1670 level a couple of times now, and I still have yet to see anything that tells me in the short term. And I'm talking in the next several weeks, right? So
Yeah, definitely. I mean,
indications
for
for
now,
that potential.
we don't have any indications. We just have a sideways price movement. We can put a couple of patterns there, but one thing is definitely very visible. This is a corrective price action. So gold, in my opinion, will continue higher after this correction is done, whatever this correction may be. So we have a couple of key levels to watch. One of the key levels is at 1,670, so that will be one of the key levels. On the upside is 1,863. So we are going to look this pattern develop back and forth. But if we are in a triangle, we should climb from here in some type of a B wave, post B wave. We should hit this and then reverse in 3 waves. And that will be, I think, a final confirmation that actually this triangle is maybe ripe. Although you never know with triangles, they can extend. But post-triangle trust in a 5 waves will be, for me, a confirmation that we might continue following up. And that will be around, I will say, a middle of December or beginning of in January 2022, which kind of aligns with these possible targets on euro, dollar, and dollar index. So it kind of fits nicely. So let's see. Silver is moving on the upside. We are still looking for this support level to hold, which actually was nicely hold here. I'm still looking for some type of a B wave, although we are starting to endanger this invalidation level for a potential wave 4. Either we can extend a little bit this wave 4 and put it here. It's still going to be a diagonal count, so I will see what I will do with that, but I still don't see a clear 5-wave move testing these levels around 27 to confirm actually that this move down in silver is done. I don't think still it is done. So I think we're going to revisit one more time these support levels before we're going to start moving rapidly higher in 2022 above 30 and even above 31, 32, 33 on silver. So I think after this 1 year consolidation and kind of a accumulation of the energy, whenever you see these consolidations, they explode usually on one of the sides of this kind of a sideways movement. So I will look for silver on the upside, especially if I see one more kind of revisit or a kiss of these levels where we had a pretty solid support during the last year. So switching to cryptos, on the crypto front, we have BITO, which is the Bitcoin ETF, start trading. And as you can see from opening price at 42, it went down to 40, and then now we are trading on a all-time high for a couple of days. We are trading at 42.14, so officially the Bitcoin ETF has started, which is definitely a step toward more liquidity, more market cap, and more exposure through the rest of the world, which was not involved in cryptos. Like this, you can have an exposure in crypto by not having yourself bothering with opening wallets and going on the crypto trading platforms. You can buy just ETF. Which will mirror the price of the Bitcoin futures. That's a kind of a good sign, definitely for a crypto space and a Bitcoin, because it will be more available to the bigger audience of traders. On the Bitcoin chart, I'm still standing on the same wave count. We have switched our bias with members on the long side a couple of weeks before, because we have seen a nice hold of this 40K, which I think it's a key level. I still count this as a beginning of this higher move. And I was very vocal on the fact that I would not like to see Bitcoin immediately reaches this 81.74 level, because that will give possibly conditions for a higher degree wave 3 top, because we look usually 2 fib ratios when we count the possible wave 3 top. First one is 38.2, which actually agrees with these 203 versus 1 levels, which we looked couple of months from January to May. And then we missed it by an inch, went down, and now we are tracing a 5-wave move. So definitely I need to see very quickly, and I think we will. RSI is pretty sizably on the upside. This is a daily chart. It goes well with the right look by counting this as a 1-2 up in 3, nice triangle in a wave 4, and the 5 waves up in a wave 5. So we will have to start continuing moving lower towards this also a nicely held 200 moving average here, which was pretty solid. As you can see, we had a nice hold. Lots of the market participants are looking at. So just to show you that it was actually this capped the price action between this 40K and 45K. We went below it, this 40K, which is a pivotal key level for the Bitcoin price action in the last couple of months. Bounced nicely well. We went above this 200, and when you pair that with the wave count, this might be a beginning of the higher rise. But as I said, I don't want to see a price going directly from here at 74, 75, 81. I'd like to see a healthy pullback in 3 waves, maybe reaching 45, 50. And then from there, I will be happy to be involved on the long side on this healthy pullback for this possible wave 3 exposure on the upside. So for me, the greatest danger for the Bitcoin move on the upside is these levels here. We looked at from a couple of sides. We have a couple of ratios, and what we also look in the Elliott Wave world, we also look for something what we call 127.2 ratio on the upside, which we usually needs to be surpassed so that the upside kind of a uptrend can continue up to next Fibonacci target. And 127.2 actually pairs pretty nicely with this target of 38.2 and 200, which forms a pretty sizable cluster. So to break this type of resistance, when you have this several very strong fib kind of ratios and clusters, you will need to be in a rapid wave 3 elevation on the upside, which are usually vertical. Wave 3s are usually the most powerful things that happens in a sequence, but that needs to be followed pre a rise on the upside by a healthy pullback from this level now, maybe $1,000 more on the upside, but that I will tolerate. As I said, so healthy pullback will be a very nice sign that the Bitcoin will continue further on the upside. So that's it from me, guys. If there is no any questions, back to you, Bennett.
Much appreciated. Thank you so much, Alex. Yeah, it's going to be interesting to see if Bitcoin can get through those levels, establish some new highs, maybe get through 70K. Could get interesting. All right, we appreciate you all tuning in. Thank you so much. If you did enjoy the content, please give it a thumbs up, subscribe with notifications to stay up to date. Of course, Alex will be in tomorrow morning, 9 a.m. Eastern, for the Crypto Lab show. Members, we'll see you in about 20 minutes for the member webinar. Traders, investors, thanks again for tuning in. Terry, Alex, any final words of wisdom before we send them on
guys,
their way?
If you can't get enough of Alex, you need to subscribe to our Crypto Trader service. Alex is on all day and all night long on our Discord channel with our clients, answering questions. It's almost like a continuous webinar with him. And when he sees something exciting going on in the market, he actually pops up a live stream right there in Discord and shares immediately with the clients the observations he's seeing. So you want to get in on the next move and Don't miss out. I tell you, Alex, my son is following you. He's still got his Dogecoin, and I showed him your chart of Dogecoin that you threw up yesterday, and he got real excited about that. So, yeah, check us out here, YouTube.com/trading analysis. All three of us broadcast some public data there. I didn't do sector spin last week. I was on vacation, but we'll probably get something out tomorrow for that. And Bennett's excellent strategy analysis in the markets. So yeah,
appreciate it. Thank you guys so much, and we'll be back same time, same place next week. Have a good one. Be safe, and see what the rest of the day brings, eh?
Yeah.
All right. Have a good one, guys. We'll see you on the next one. Take care.